Hello and welcome back to the series. This is the $300 to $100,000 series. And this is going to be done by trading stocks and crypto. So today I'm just going to discuss the strategies that I'm learning. Before I start, I do want to just again emphasize, I think I need to do this for every video. This is not financial education. This is not me trying to teach you anything. It's just documenting my journey in my financial education, and I want to see if I can get to $100,000. I have started to realize I need to start setting miniature goals. So 300 to 1,000, 1,000 to 10,000, then 10,000 to 100,000. I'm working on that, and I'll probably do a video about those goals at some point in the future. Today we're going to talk about the strategies I've been learning, because it is important to have a strategy. So the first one that I've learned about is the news trading strategy. This one is based on the news. So you assess the news immediately and trade accordingly. The benefits to this are that there are many trade opportunities available, and there's a defined entry and exit strategy. The drawbacks are overnight risk and requires high-level skills. You need to watch the news objectively and make snap decisions based on how you think others are going to react. So I feel like this one's interesting. I'm certainly going to do more research on it. I don't think I've fallen in this strategy, though. The next one I learned about was the end-of-day strategy. This is trading at the end of the day. You buy and then you sell the next day at open. And I guess the point of doing this is that when you look at the chart, you'll notice that a lot of stocks, not all, do end the day low. They, like, after hours, they seem to go down, and then at open they do seem to go up. So I think the strategy is just, you're buying when they drop down a bit at the end of the day, and then you're turning around the next day and selling those. So that's the end of day strategy. The swing trading. Now this is the one that I think I'm going to be focusing on mostly. I think this one it suits me best. Swing trading takes advantage of the market's oscillations as the price swings back and forth. This is a purely technical analysis based trading strategy. The benefits to this is that it's viable as a hobby, suitable for people with less time, which that's me. And then there are many opportunities available for this trading strategy. The drawbacks are overnight risk, and it requires a lot of research to understand how to analyze the markets. And I'm okay with that. I'm educating myself on all of this right now. Anyway, the next strategy was day trading. This one, I feel like this is probably the most commonly known strategy out there. This one's the one where you literally buy and sell same day. To do this, you should be able to understand the support and resistance levels on the charts for the stocks. And most traders, day traders, seem to trade between the hours of 12 p.m. and 5 p.m. GMT. And that is when the Asian, London, and U.S. markets are all open at the same time. So there's more opportunities to be making a profit there. Benefits are there's no overnight risk, which makes sense. You're day trading. Limited intraday risk. It's flexible, so you don't have to keep watching the screen. If you have an hour during the day to do this, you can go to whatever app you're using, Webull, E-Trade, and do some day trading. Multiple trade opportunities available, as I said earlier. The drawbacks are that it requires discipline, and you could end up with flat trades. So you buy and nothing happens. So you either need to decide to keep or sell. And I suppose that'll depend on your own personal rules for strategies for for trading. Can't talk. Sorry, I need to scroll down here. The fifth one is trend trading. A trader that uses technical analysis to define a trend. Based on that information, the trader trades in the direction the trend is moving in. One of the common phrases for this trader is the trend is your friend. So you need to have the ability to understand the trend lines and the information that all that entails. You need to be able to understand the different tools of the trade. You must be able to analyze equities, treasuries, currencies, and commodities. You need to stay alert, and you need to figure out what time frame you want to follow for trend trading. This one seems a little bit heftier than some of the other ones in terms of the work required, but it's certainly interesting. Benefits are that it's useful as a hobby. and there are many trade opportunities. The only drawback is overnight risk. So, you buy and then the next day it goes down before market open. So that's apparently the only drawback. So it's not, I think that's the only one with only one drawback. So that one might be a good one to go with. I'll certainly be looking at that one. The next one is scalping, the scalping strategy. This one is making short-term trades with small price changes. So the benefits to this are there's no overnight risk. Again, it's kind of like day trading. Suitable as a hobby, and there are many trade opportunities. So with this one is you buy a stock and then you sell it when it goes up like 5 cents or 10 cents. So very, the profit's low, but if you keep doing those over time, I suppose you'll end up increasing your profit. The drawbacks are that there's limited market applicability. It requires discipline, and apparently it's tense. I've not done this strategy before, so I haven't really done any of these. My only strategy in the past was, oh, this looks like it'll do well. Let's see. And then the last strategy is position trading. This one is more of a long-term strategy. It's very popular. You hold for long periods of time, years, decades, and you're using fundamental analysis to make your trades. The benefits are that you can have high profits and less stress. Less stress because you're not wondering if you should trade the next day or just, buy or sell. Should I do this or that? It's just, no, I'm going to keep this for years. The drawbacks are you could also have significant loss because a company that you buy into might crash and stay down, or it might go bankrupt. And then the other drawback is the commission fee you need to pay to the broker, and that's called the drawback is called swap. So I will go ahead and do a video on each of these strategies as I learn about them and try to post them once a week, and then we'll see where we go. Again, this is not financial education or financial advice. Thank you for watching. If you have any ideas, please leave a comment. I'd love to hear from you if you have any thoughts, ideas, let's see where this takes us. Thank you for watching, and man, if we just think about this. What if in 2 years, we make it to that $100,000? It'll be really cool to see the documented progress of that from now and then till 2 years from now. Obviously, I would love for it to happen sooner, but I'm just thinking realistically here. But I'm really looking forward to that period of time when I'm in the future looking back at these videos. Again, thank you for watching. Have a great day. Bye.